Hunting fans, Mr. Terzini here, live on Tuesday afternoon. Hope you guys are all well, handling this new quarantine situation. Today, just going to give an update on where we stand. As you guys know, we've been working now for a couple of weeks on a pretty big, comprehensive project, taking a business, going for a month of transactions, going through the accounting cycle, journalizing, posting to ledgers, creating a worksheet, doing adjustments, completing the worksheet, preparing financial statements, and then finally closing. I've shared a couple videos and presentations with you in reviewing kind of each step. If you took a look, our last step that we reviewed was our adjustments. Went over each type, each style of adjustment for you guys to reference as you're going through the big project. Today I'm going to talk about the financial statements. Again, this is not new, things we've done many times. Just a handful of reminders, another resource for you to reach back and review and take a look, make sure you're doing it correctly. So I'm going to move to the financial statement presentation, and then maybe we'll come back again here at the end. Just a final reminder, this assignment is due Thursday. All right, so today, tomorrow, Thursday, you got 3 more days. Thursday by midnight. It's a large project. It's a large grade, all marking period 4. I haven't seen a lot of you, to be honest with you, in our Google Meet sessions or even during office hours. I have not seen a lot of you. I hope this is just because you don't have any questions and not because you haven't done any work, because it's a lot to do. Again, another reminder, I've been trying to mention this and send this out. This is a college class. I have submitted to the college what our steps are for the end of the year. They are expecting an exam and are not just going to grant credit. So please make sure that we put the time in all the way here to the middle of March. Because our situation has changed, I don't want you guys to give up on it. All right, without further ado, let's go through the financial statements. All right, I'm going to talk about these in the order that you should complete them. All right, they must be completed in this order because you're using numbers from one financial statement to move to the next and so forth. So doing them out of order might cause some problems. So our first financial statement that we're going to prepare is going to be the income statement. As you know, the result of the income statement is going to determine whether or not we have net income or net loss. Our companies are pretty basic, merchandise and service business. We don't really have a lot of additional income revenue streams that a corporation might have. We don't have to show any shareholder equity or any of the more specific stock-related situations. All right, so it's pretty straightforward. Everything we're going to do here is including all of our revenue and expense accounts. Please, as a reminder, there are no assets, no liabilities, and no capital accounts found on the income statement. We're going to list our revenues first and then add them up for total revenues. We're going to list our expenses next, add them up for total expenses. We can get the numbers for all of this from the worksheet, the income statement columns on the worksheet. Please don't take it from the unadjusted columns. It will not be good. All right, we made adjustments to many assets which affect the expenses. So make sure you get the numbers from the income statement section of the worksheet. We subtract the revenue and expenses. If that number comes out positive, we've got net income. If that number comes out negative, then we have a net loss. All right, so here's an example of style 1. Notice I've got my revenues listed first. If you only have one revenue stream, then you can list the total amount over here in this column. If you have multiple revenue streams, list them individually here, add them up, and put the total in the far column. I've titled my expenses. I've added all those expenses in. Sorry, it's kind of long. All right, it's not cooperating. All right, there we go. Added all those expenses. Oh, it switched slides. Added those expenses and total them at the end. And as you know, in a company we're working with here, we have a net loss. But again, notice that all of the account amounts are in one column and the totals are in a separate column. All right. Now, here's style 2. Either style is acceptable to me. There's not a lot different in style 2 other than I've moved sales returns and allowances and sales discount up to the revenue section. All right. Technically, they are contra revenues. They work against sales. All right. These are things that we sold on day one and the customer brought them back. So we can't claim them as sales anymore. Or within sales discount, we have granted the customer to send us less money because they're paying us within a certain time period. We want to encourage them to pay early, and we're willing to give up a percentage or two to have them do that. These work against sales. They are contra sales accounts. So if you notice the parentheses, they are negative. We're subtracting these or adding a negative number, same thing. All right, so I moved them up there. So we've got grooming revenue and nails, daycare, etc. Then some stuff was returned or a discount. And then we subtract those. That's why the asterisk is over here. So you can leave them down here in the expenses or you can move them up here in the revenue. Whatever you do, if you move them up, make sure you subtract them. It's not going to increase your revenue, but decrease. And then again, we have our totals, individual account, and totals. Now, W down here, the net loss or net income, depending on the situation. That's an important number. We're going to need that. All right, moving on to the statement of owner's equity. All right, that's the second statement we're going to do. This is for the accounts that affect capital only. All right, and the accounts that affect capital are your capital, drawing, any net income or net loss. All right, so basically in this statement, we are trying to figure out where we started the period and where we ended the period and what affected capital during the period. So what affects capital during the period? Well, additions to capital. So if the owner gave more assets to the company, he took a personal asset and gave it to the company, took cash, took a vehicle, took a building, took land, anything, whatever the owner wants to give to the company from personal to the company, that increases capital. Then we have drawing. The owner has full authority to withdraw anything from the company. Usually it's cash, but the owner can take an asset back. You can say, okay, this computer system is no longer the business's. I'm taking it for personal use. That's an example of drawing. And then obviously any income or net loss that we had. All right, so where do we start? If it's a brand new company and the company that we're doing in our problem is brand new, our beginning capital is 0. All right. If it's not a brand new company, now that would only happen once, obviously. For every other quarter or every other month, every other year, however often you do your statement of owner's equity, it's not going to be new. So you're going to have to go find the old capital number. So you could just revert back to the last statement of owner's equity to find the ending capital. Right? So the ending capital for period 1 would be the beginning capital for period 2, and so forth. The ending capital for period 12 would be the beginning capital for period 13. In our case, it's a brand new company, so the beginning capital is 0. And then, did we have a net income or net loss? And you could revert back to the income statement to find that. Right? So here's our example. Beginning capital. Again, in our case, this number would be 0. And any other time that we did this, we would revert back to the last statement to find it. Did we have any additions? Again, in our problem, we had a lot of additions because the company started with a capital of 0. So the very first transaction was the owner taking personal assets and giving it to the company. And then net income or net loss. We had no net income in the last one, so this would be 0 here. Now keep in mind, you can have one or the other. You can't have net income and net loss, so you'll never have both of these numbers filled. Here, C and F here, one of them will be filled. And then did the owner withdraw from the company during the period? It's less drawing. Less means subtract. Plus means add. Less drawing, less net loss. So again, individual numbers here, totals over here. And then at the bottom, it says ending capital, D minus E minus F. So D here, minus the E and F, and that's your ending capital. All right, that's an important number again because we have to use it for the next statement. All right, finally, the balance sheet. The balance sheet must follow the statement of owner's equity, do them in order. The balance sheet proves the very first equation we talked about on day one. Do our assets equal our liabilities plus our owner's equity? So if we're going to prove that formula, those are the only accounts we want on there: assets, liabilities, and owner's equity capital. All right. Like all the other statements we do, individual amounts go in one column, totals go in another column. When we're looking for that capital number, the last number we're looking for at the bottom of our statement, just revert back to the statement of owner's equity. Please, please, please do not go back to the worksheet. All right, do not go back to the worksheet. Just go back to the last statement of owner's equity. All right, now here's an example of the balance sheet. Notice again, our individual column. Now this is 3 columns. Here, please make sure you do this. These are the depreciation accounts. We had a van, and we have to subtract the depreciation. So I minus J, and the answer here, K, goes over there. The van was purchased at I, we depreciated J, subtracted 2, that's the value at that point. We did the same thing with the warehouse. Right, so please note that. Then we add up all these numbers, all right, to get total assets. Keep in mind, for all of our financial statements, we never have a value that doesn't have a heading or a title to it. Don't leave anything just alone as a number. You always have to have a title or an account attached to it. Next, we add up our liabilities. As you can see, total liabilities. And then we went and got the capital. Okay. So here, assets is up here, equals our liability plus capital, and our equation matches. All right, so there it is. That should help you out as you can review and refer to as you're doing your financial statements. If you're at your financial statements today, the next thing you have to do after that is your closing entries. We'll cover closing entries. It's pretty straightforward. If you need some help with that and how to post those to our ledgers, and then we're going to be done. All right, and we'll move on after spring break. Next week into some new stuff. All right. So again, I hope everybody's well. Hope everybody's staying healthy. We do have a group meet coming up here at 2 o'clock. If you're interested, hopefully this will be posted by then. It does take a while to load a Google Classroom, but hope to see more faces at 2 o'clock if anybody has any questions. All right, that's what it's for. I know some people have responded and submitted their assignment. Let's take a look. Where is it? Where is it? Where is it? Oh, here we go. So 4. We still have 16 out there that haven't submitted, which is fine. Not due till Thursday. All right, not due till Thursday. All right, see you guys soon, and stay safe.